Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
Let's now move on to our investor panel, where we'll try and answer the question, what AI technologies are investors most excited to fund right now? Moderating this panel is Nihat Arkan, Senior Vice President at Corum Group. This is a great opportunity to understand what investors are looking for. Nihat, the floor is yours.
Such a great day, especially for me, because I have a very distinguished group of panel participants and representing truly a global marketplace. We have representation from Europe all the way to the Silicon Valley. And, when my company offered me to moderate this particular workshop and investor panel, I looked at the background of the participant and I said, at the minimum, I really want to join this to learn from you. So we have a very distinguished, really great participants, the speakers here. We have Tanya from Stockholm, founder and Butterfly Partners. We are really happy to have her. Brian Mahon from Santa Monica. I don't know, when you live in Santa Monica, I don't know where you go for a vacation, but that's a different topic that we will discuss later. Gabriella Smith from Dallas, the founder of Let Amplify. Steve, coming from Palo Alto also, the founder, co-founder and MT of the DN Capital. And of course, Tara Zahiri from San Francisco, Vice President of Monsale Partners. So the goal of today's discussions, the panelists, to look into the practical insights of the investments on, of course, the growth and investment strategies. But we are in a different era. We have now AI. So how the impact of the AI changing our decisions, particularly looking on the investment sides. You are really a distinguished panel member. I really love to learn from you how you help. How you define, and more importantly, how to help exiting the companies that you really look around the globe. So without further ado, I immediately would like to start and like to ask all of you to, if you could please, to explain your current role in the companies. Most of you are co-founder and founder of the company, so you have the vision, as well as the what about the fundamental characteristics of the companies that you invest in, when you think it at the global perspective as well. For this one, if possible, I'd like to start with Tanya. And Tanya, if you could please go forward, and I'd love to hear your view on this.
Great. Thanks, Nihat. And it's really nice to meet my fellow co-panelist here. As Nihat said, I'm Tanya Horowitz. I reside in Stockholm, Sweden. However, you can detect that I do not have a Swedish accent. But I've been here for 12 years, so I'm surprised I haven't received it yet. But New York through and through, but prior to that, I've been co-founder of a US-based angel fund called CAPA, or Capital A Partners. But in Europe, I am a partner for Butterfly Ventures, as Nihat said. We are a Northern EU-based deep tech impact fund. As I mentioned, CAPA is an angel fund, and there it's a quite normally just a one-time ticket, and we invest all over the US and Europe as well. Typically B2C, high growth B2B companies. Butterfly is a 50 million euro fund investing in, as I mentioned, science-based deep tech impact-related companies. We have companies in the semiconductor industry, industrial technologies, climate tech, sports tech, and of course AI. So AI is dabbled throughout some of these as well. I've invested in over 75 companies in my VC career, because prior I was an investment banker. And so that's across, again, US and EU. Thank you.
Brilliant, brilliant, Tanya. Steve, please go next.
Thanks, Nihat. So I'm Steve Schlenker. I'm one of the co-founders of a firm called DN Capital. We are investing our sixth fund now. We've deployed into portfolio companies over the years about $700 million and have given back so far about $1 billion of exit value. I've been responsible for about half of that, so about 500 million of exits. AI is about 2/3 of what we do. I co-lead our AI strategy, and we do mostly pre-A and A rounds, about 2/3 in Europe, 1/3 in US. I split my time between London, Palo Alto, and Park City.
Yes, Steve. Gabriela, you're next.
Thank you, Nihat. Nice to meet everybody. I am based in Dallas, although I'm currently in Florence, Italy. I made it just in time for this presentation. I am the co-founder of Let's Amplify Ventures. It's a fund, a very, very new fund that we created last year as a result of some opportunities that we saw, particularly in the Latin American and Northern England market. And about 90% of our investment has some aspect of AI. Either AI is the engine behind the application, or there is some aspect of AI that the application uses, but maybe it's not central. And we are a pre-seed angel syndicate.
Brilliant, brilliant. Thank you, Gabriela. Tara, if you could please also go next.
Yeah, great. Great to be here. So as you said, I'm a vice president on the team at Mainsail Partners. Mainsail is a growth equity firm focused on investing in B2B software companies. We typically look for vertically oriented market leaders who have product market fit and a long-term growth potential. Some of the fundamental characteristics of the companies that we partner with include mission-critical software tailored for the unique workflows of the vertical that they're serving, durable business models with recurring revenue and good unit economics, and sticky products with high retention rates.
Perfect. Thank you. Brian, you're the next.
Great. I'm sitting here thinking, Tanya, I have such a great deal for you. I think we should just move this straight into deal flow and see if we can make some money by the time we finish the panel.
Sounds great.
I'm Brian McMahon. I'm founder of Expert DOJO. We came out of a family office, like a very different objective at the beginning. Our objective was, how do we maximize $30 million at the start? That was it. It was as simple as that. And we had a number that we wanted to try and achieve. We wanted to try and see, could we hit $1 billion? And we didn't really have a mandate. We didn't have a thesis. We didn't have anything. And so we started out as really copy and paste of Y Combinator with some very strong growth hacking in there, and then layered in venture capital. And over the years, we've built it up. Now we've got a couple of hundred companies, 300 plus companies we've invested into. And we've built in accelerator, venture capital. We now have public market vehicles with warrants and options. We also have private equity and incubation. And I have most of the venture capital part of it, with a managing director running all of that. And I drive all of our private equity now into the companies that come up through the family. So nice to be here.
Thank you, Brian. The AI, now we're going to be talking a very interesting topic, AI, which is probably very strange to many people. Yesterday, my uncle called me. He lives in US and he's almost 90 years old. And he told me if I could help him to sell his properties in North Carolina. And I asked him why. And he told me that, he is sure that this will really, he wants to get the liquidation and put the money in the certain areas, including the gold as well as the interest, and then he will have a better return. He's almost 90. And I said, how did you know this? He said, ChatGPT. So to me, like 90 years old uncle trying to figure out like how to make better money in his hundreds, I guess, but was really interesting. So You are all professionals. You are global. Tanya being here, here in Europe, and then of course you all are in a very interesting, managing very interesting companies. My question is that how important is the AI sector when it started coming into our real life? Now it looks like it's a daily life. Your investment thesis. So for that, if I could please start with Steve.
Well, as mentioned, about 2/3 of what we do would be AI, but it does seem to filter through all of our portfolio investments. And I think it's important to note that what we call AI right now is really just an iteration of 40 years of history. Machine learning has been around for many, many years. Europe were some of the leading researchers, particularly in the UK market. And our company Shazam was using machine learning on NVIDIA chips back in 2004 to try to improve the speed of recognizing music. But I think a lot of us as investors really started deploying money into AI around 2019. We've already had 3 exits for about $1.4 billion this year in AI companies. And so I think it's really, when you think about where does AI fit, it's part of the continuation of many multiple trends that we've seen, from internet to web computing to mobile computing to cloud computing and now AI computing. But ultimately, none of us are investing in AI companies. We're investing in great companies that just use AI to be even better.
Like AI being really one of the technology, like compared the internet or in the industrial revolution and having no particular region or sectors. I love to hear Tanya's voice, particularly like how do you see it from Europe?
Yeah, I mean, it as Steve just mentioned, I mean, obviously, I mean, AI is kind of there's been a lot of research and whatnot done, obviously from the fundamentals. It's really interesting. I mean, we have a quantum computing hub in Gothenburg in west coast of Sweden, which is was launched basically and funded by the Wallenberg family, which I'm not sure if anybody knows, but one of the wealthiest families in Sweden. Um, and interesting enough, Lund University, which is in southern Sweden, they're quite well known for semiconductor industry. Well, what's interesting about this is those are kind of the fundamental deep tech drivers that will allow obviously AI to continue. What it's the compressing, the pressing power, as well as the computational efficiencies that you will be continuing to see that we need to have, of course, to continue on this AI journey. I mean, I see so many of our companies that we invest in very early stage deep tech, and now we're starting to see a lot of AI coming into those perhaps even industrial solutions, for example. And I find that's really interesting as well because, industry has been around for obviously hundreds of years, and a lot of them are very, they really don't want to change. So having them starting to use AI and using in a factory setting, for example, it's been a bit of a challenge, but I think you're starting to see that kind of breakthrough now. I mean, there are tons of pockets throughout Europe, of course, that are, from an AI perspective. I mean, obviously we have Lovable here in Stockholm. I mean, that's but one of the big ones that has recently been touted, and wow, what a journey that they've had. So there are definitely pockets, and what we find here in Stockholm, and we've had the Klarna founders, and we've had obviously a lot of other big exits, such as Spotify and founders, and they're all back home here reinvesting what they have done and their expertise back into the ecosystem and hopefully driving the next Lovable, for example. So it's really kind of interesting to see how the ecosystem continues to give back, particularly in AI.
Brian, what are your thoughts?
So, yeah, I mean, everybody's correct. The AI is the internet, just faster. That's all. I mean, but in 1970, the internet had no real impact on the world. It was just a really fun thing for super advanced companies to be able to get very big valuations. And I think to look at this and for people to understand what's happening here, there are two separate things. One is innovation in the world and the speed of innovation. And like, you don't need this panel for this. Anybody can see that the speed of innovation is going so much quicker and people are going to have things implemented which are going to be crazy. Like, I don't think anybody will have cars. Maybe anybody is strong. I'll say I think 40% of people either won't have cars or their cars will be driving for them within the next 10 years. Like, and I actually think that could be super conservative. I think kids, in the same way, will look at cars and the way we owned cars and kept them 90% in our garage, the same way as they look at analog phones and wondered, why would somebody even think of tying a phone to that? So the speed of innovation is going to go very, very quick. And everybody needs to be aware of what's happening so they keep up with it. But the other world, which is the world that we live in, and we don't really live in the world of innovation, speed of innovation. We live in the world of narrative and bubbles, because our timeline to get returns is far more constrained. So you got to get like returns within a 5 to a 10-year period. AI isn't going to develop into something awesome for at least 5 or 10 years. Most of the stuff in the meantime is going to be garbage, which means that a lot of what needs to be built onto it is going to be narrative and bubbles. And it was like a really good talk by Jeff Bezos, who was talking about different types of bubbles. And he's like, financial bubbles, i.e. 2007, 2008, are terrible. There's like nothing good about a financial bubble whatsoever. It destroys everything around it. But I think he called it an innovation bubble. Those bubbles, he actually used a nicer term, but like those bubbles are actually really good because there will be chaos. There will be crazy valuations given to silly companies based on mini pyramid schemes whereby just a bunch of very colluded people will make sure a valuation will jump up to 2, 5, 10, 50, 100, 200, 300 billion dollars. But like that's part of the chaos of the beginning, and it's what's needed. But what will come afterwards is an entirely different world, which a lot of people that are our age and maybe, 10, 15 years younger need to adapt to be able to survive.
Absolutely, absolutely, and that's very critical, not only for their business life, also for their social life, especially like taking care of their elders, maybe looking after their retirements and processes that they have to follow, and so on. Fully agreed. Tara, what are your thoughts?
Yeah, I mean, I think we view AI kind of the same way as like it's permeating every aspect of the world right now. And so we really rather than just chasing the hype of AI, looking for companies that are really leveraging AI to drive efficiencies in their business and differentiate themselves. And so, we there's such a powerful impact to it across the board, and looking for companies that are embracing that is really important. I think there's a lot on just operational efficiency. We see a lot of companies leveraging AI in customer support and go to market and customer health and better understanding their market opportunity and driving efficiencies internally. Then there's just product opportunities and how to leverage it into their roadmaps and the products that they're delivering to their customers. Um, and so we see it as a huge value unlock in our value creation arsenal toolkit, if you will, to empower these companies that we're partnering with, but not necessarily just chasing after the AI first companies, but companies that really understand the power of it.
Yeah, definitely, it makes sense. And Gabriela, when you look at your overall company thesis, when especially now moving into the AI world, like how do we evaluate that? Like, did it really change your previous thinking about investment, particularly thinking what your also like the investors thinks about it?
Yeah, we're a little younger, so we actually we co-founded the Angel around the time the AI basically became popular, or ChatGPT came out and suddenly AI exists, and I think that's one of the conversations we were having the other day. There was one day we had ChatGPT, the day before we didn't. It was this crazy thing, right? And everybody started using it, and it kind of happened like that. So we always had AI as part of a must or a want, because I think, like I was saying a little bit earlier, I think these days, you either implement AI in some shape or form. Even if you're a manufacturing company, you're going to use AI for some process in the company. And the process is usually going to end up being more efficient than it was without the AI, right? Like, more efficiently financially, or all the things that AI can bring. And then the other aspect is that, of course, I mean, if you can have a solution that can be done with technology that uses AI, why not? So it's almost like everything. I think 90% of our investments have AI. And Tara, to your point, we actually have sorry, Tanya, to your point, we have actually invested in a couple of companies that have built significant parts of their platform with Lovable. And we see the pockets of people with ideas that can now bring the idea to market in a significantly faster and cheaper way than they were even a year ago. And so we've seen teams create ideas and then finish, maybe maybe the things that Lovable can do, or the things that they need to do by a data engineer or something like that, and then finish it off at a portion of the price than it would have been 2 years ago. So that just is interesting to watch, because the entrepreneurs now can do things that they couldn't do in the past. So
Absolutely. 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 Brilliant point. Now, I wanted to speed up a little bit to looking at the investment and growth side of the AI companies. And I want to go back to Brian. Brian, like when you look at your portfolio and, of course, your past investments, like which companies did you invest, especially like looking at the tech models, the business models, and then what made you excited investing in those companies, and what are the key qualities, facts suit for you to make the investment?
Right. So remember, at the beginning, we experimented. So we wanted to find out which were the best models and try and combine all of the best models together in one place. So the good thing is we had a petri dish of a lot of companies to choose from. So even these behind us on this wall, like this is 300 companies, 300 founders' faces. There's like dozens of founders in Africa, dozens of founders in India, tons of founders in Latin America, just a couple in Europe, interestingly enough. Even though I was originally from Europe, I find the early stage mentality very limited compared to the American mentality. I think like they just think a lot smaller. And private equity, Europe obviously moves into its own place. But in the other regions, we invested super heavily. And in those regions, it was different depending on which region you went to. So we went to Africa, we went super heavy on fintech and also on food and logistics. So we got, a company in Africa, Winage Farms, that are well on their way to becoming a unicorn. We've got two fintech companies, Credit, just raised like a company on stable coins. And I'd love to say I knew 2-3 years ago that stable coins were going to become the de facto easy passage to building a unicorn and remittances between. But I didn't know that. But what I did know was that actually sending money across developed economies was a nightmare. And it was so broken that something was going to fix it. And so if we made multiple bets in founders that we thought had very strong execution with an opportunity to be able to get fixed pricing to make subsequent much larger bets in the future, we were going to do really well. And that did great in Africa. Like I said, we got two incredible companies breaking through, raised huge rounds. We've got significant ownership in them, which we've got at very low prices. India is entirely different. India is going through the convenience economy. It's going through the American 1970s. Nobody wants to wash dishes anymore. That's where all the money is. So send massage therapists to people's houses, have drivers in cars. It's not, they are the smartest AI people in the world. IIT over there is like spitting out about 23,000 new engineers every single year. However, all of the unicorns that are breaking through in a massive convenience economy. And in the US right now, most of what's happening is how the heck do companies increase their efficiencies so they show more profits so that they can maintain the crazy high prices that are in the Wall Street right now. So wonderful. So anything to do with efficiencies and building. And if AI helps that do that today, God bless it. We're investing in that. But I far rather the places that AI is destroying rather than the places that AI is building upon, because the places that AI is building upon, it's too heavy a race to go after that. So I think it just depends. And by the way, sorry, I'll just say the last place is like Latin America. Latin America, Mexico especially, is super interesting right now. They have diaspora, I suppose, to take the African word, all over the world. and they're transferring money, remitting money, going home, coming out, building out an ecosystem which is entirely different to anywhere else. So it just depends on the region they're going after. But just going back to Steve's point at the very start, you got to look for the monster pain, the red dragon, the evil that's affecting that particular consumer, that particular business. And like, do we have something that smashes through on that? And then if there's AI on top of it, that's just a cherry on top of the pie.
Absolutely. With that point, I'd like to go to the Steve. Steve, what do you think? What are your thoughts?
Brian, I appreciate the good notes, and I agree with you that you have to focus on the underlying businesses. We are very thesis driven, so I'm going to give 3 quick examples of AI deals that fit alongside theses. So one thesis of ours is that you have to be able to ensure trust in an AI world. Our view is that if you look at the cybersecurity world 25 years ago when DN was set up, it was about a $5 billion industry. Now it's, I think, $150 billion plus a year industry. The amount of fraudsters, the amount of doppelgangers, the amount of people stealing identity using AI, the security and protection against that today is also about a $5 billion industry. But over the next 10, 20 years, it will equally be 120, $150 billion industry. So we have a company called Encode. It was the first company that used all AI for biometric authentication. And now they're expanding into working with DMVs and working with hospitality and working with football stadiums so that hooligans don't get through the stadium. And when we invested in the start of 21, it was doing about 6 million of revenues, and now it's doing about 170 million of revenues. And because it's all AI, then it can solve these problems faster, fewer false negatives, fewer false positives than using humans. And so it solves a real problem, which is ensuring trust. We have another thesis around financial inclusion. So we had a company that was called Bridget. This was a case of internal AI. So it was a team from Palantir that basically said, how do we ensure people don't have to pay overdraft fees if they're unnecessary? And so they'd use AI to predict spending patterns. And if someone looked like they're credit worthy, but looked like they were going to get in financial difficulty, they would put a small amount of money into their bank account, interest free, just enough so they didn't have to pay any bank fees. And then they would improve credit scores. And based on improving credit scores, they would charge a subscription fee. In about 5 years, we built it to about 150 million of revenues. And more importantly, we saved low-income Americans $1.1 billion of predatory bank fees. Third thesis that we had is a thesis around using AI to improve trust and empathy. And empathy is something that's very hard to capture with technology. But in this case, we had an AI company that could predict the next syllable someone was about to say and in real time allow that individual to soften or remove their accent as they were talking. So if you're in a call center in India, in the Philippines, in Latin America, you quit your job every 6 to 7 months because you're getting harassed. People are saying, repeat that again. You must not be intelligent. Why don't you speak better English? If you allow that person to be more understandable and give control to them over how much of their accent they let go through without changing who they are, without changing their voice, then they have better job security. They have better appreciation in terms of standard of living. They're able to complete more calls per hour. The call center has higher CSAT scores. And that company is adding 10 million a quarter of new bookings, all enterprise sales. So these are real world applications, but they stick with theses about how do you make the world a better place. And for us, that's very important. And the whole point of investing in technology, you can make money anywhere on the planet. But if you can make money making the world a better place, then you kind of feel good about yourself as a VC.
Absolutely. Absolutely. Tanya, is this same view, like when you look at it from this part of the continent?
Yeah, and I think it also has to do with the fact that we started back in 2012 as a deep tech fund, and back then, the original founders were all from Oulu, Finland, and if anybody knows anything about Oulu, Finland, it's the home of Nokia. So you want to talk about hardware specialists. So, it was all about, how you eventually saw software creeping into the smart hardware, obviously. And now we're seeing, with the AI boom that is happening, we are really starting to see, hardware, software solutions, and then of course also smart, just software solutions that are creeping into our portfolio. Maybe a good example of one is one we invested in last year, a company called Zenus. They're still quite early, but they're a hardware software solution that's revolutionizing and digitizing the tennis industry. So if you play tennis, you go onto a court and it's just you and the other person, or if you're playing doubles, there's 3 other people, right? And, yes, there's some apps out there that can basically, you can set it up on the side on your phone and then it'll video you and do some fun things. Well, the Zenith system is a little bit more than that. It's a true end-to-end solution, taking not only video feeds, but also analyzing the player stats. It gives the player style. It helps improve, of course, and this is also being this company just did a big partnership with Glue, which is in France. So Daniel Glue, he's a very, very big and important coach, and all of their coaches now that are training their juniors are using this system because why? Well, the AI can basically do what the human eye hasn't been able to do, and be able to analyze these players and say, okay, this 16-year-old is going to, he's got the play style of a Rafa Nadal, for example, and we know how to train him now. So it's really revolutionizing and digitizing like not really an old industry, but an industry that, has really never seen this type of solution before. And what's really amazing is it is just they're getting calls from all over the world now. So it's super cool. And I would say in our portfolio, it's one of the best examples of how we are seeing now AI kind of coming into our deal flow.
Brilliant. By the way, Tanya, I met with Muratoglu in Paris 2 years ago because our ancestors comes from the same country. But I want to go to the Tara. Tara, what are your thoughts?
Yeah, so we've seen some really exciting applications of AI in our portfolio companies. As I mentioned, we look for companies that are leveraging AI to drive, to enhance their products, operations, and drive efficient growth. And we've seen a number of examples of that. One of our companies, Rentvine, their property management software, they built an AI assistant that allows their users to perform operational tasks using natural language. And creating things like bills or recording payments or even, recording speak. And that's really allowed them to simplify workflows and tasks for their customers and ultimately drive efficiency. Another one of our portfolio companies, InspectPoint, their fire inspection software, they've also launched an AI assistant that's been able to do the same, helping with fire safety inspections. And I think the qualities that really stand out across these different use cases is the companies really understand their customers and their customer specific needs, and they're able to develop AI tools that help with that and that are purpose built for that. Their customer relationships are really sticky, and they have very valuable data from those customers that allows them to create differentiated, meaningful products. And they're taking a disciplined approach to AI. And, there's so much out there. I mean, we look at a ton of M&A opportunities, as add-ons for our portfolio companies, and it's hard not to get overwhelmed with all the options there are. But taking a disciplined approach to it and thinking through where we can leverage AI to drive the most value for our customers, and using that as the driving force.
Brilliant. Gabriela, I would like to go to you. And while you're answering this particular question, could you please also add a little bit comment on, maybe it's a little bit a tricky question, is how are these investments turning out? Like, what are the lessons you learned? So that if you could combine your questions with these two, would be brilliant.
Sure. So we can see, again, these are newer companies, newer investments, things that have popped up probably in the last 12 to 18 months. And they are, we're excited. One of the solutions that we invested in, most of the solutions we invest in are either innovations in the professional services industries. So I can think of 2 of them. Match, kind of like a marketplace for professional firms to connect with professional firms using it's not necessarily an algorithm, but it's more like AI looking at a person's profile and matching them, which, as far as our latest research, the larger competitive platforms don't use that. They focus more on scrolling and see which professional matches with the need of the person hiring. So the interest is there, and there are no other players in the US in this particular industry. So so far we're seeing success. So yeah.
Excellent, excellent. Steve, what about you? Like, do you see like a great return? You mentioned several exits, which are quite impressive. But what are your thoughts on this? I think you're on mute.
Yeah, our portfolio of AI companies recently passed an aggregate of about 400 million of revenues, but that's heavily weighted towards the top 5-6 companies. I would say that across the roughly 20-ish AI companies we've invested in, there's still quite a number that are sub 10 million of revenues. In terms of companies we've exited, I mentioned 3 so far this year. The return of capital to the LPs was about 110 million euros from those 3 investments. So it's been a reasonably good return. Our funds typically are around 200 million in size. So I think so far it's early days, but it seems to be in the right direction relative to what we would expect.
Brilliant. Tanya?
Yeah, so not just honing in on Zenus, but I'll talk about the wider portfolio in a minute. But as I mentioned, they're getting such great momentum right now. For example, they're doing their Series A. The market's really pulling them. In 1 year they did 3.5 times, the revenues. So they're really, really moving. It's one of those companies where, okay, I'm working with them on their Series A, and we have lots of really great investors that are looking at it. And from the rest of our portfolio, I would say the rest of our kind of AI related companies that have AI as part of the tech stack, they're like Steve said, probably they're early days still. So we hope that there'll be some hockey stick at some point. And I do believe, look, like we mentioned earlier, Lovable, it just kind of just caught on, but it depends, I think, in the sector and area that the AI, industrial AI, as I mentioned earlier, it's a little bit slower because of the adoption rate. So I do believe that it has a lot to do with, the end use customer that ends up using it. But all in all of our AI companies are doing quite well, and we expect them in the next, years to continue.
Brilliant, brilliant. Brian, I love to also hear your thoughts on this.
Well, I'm just so enthused and excited by this call. Like, this is maybe one of my best calls all year, because now I know I can get my tennis career back. I thought that was it. I thought I was done. But it turns out that at 50,
I can also get a discount for sure.
I'm going pro. I was like, while you're doing this panel, I'm actually signing up for the tour because I'm going to get Zenus on the court. No, I love that kind of application. That kind of application is so good because it's impossible. Biases are so hard. It's such a good application as to why AI is so powerful, because you get 15 different tennis coaches. They're all going to give you different advice, like a soccer coach. You'll be like, "Man, put your foot back." And if anybody watched the Williams movie, it's so interesting. Everything he did was counterintuitive to what the coaches had learned their entire life, but their biases were so strong that those coaches couldn't possibly change what they're doing. It's actually the same with everything. It's the same with medicine. It's the same with doctors. It's the same with drug development. It's the same with everything. And right now, of course, there's a whole argument about AI having tremendous biases, but it's nothing compared to where we're coming from. So I think like that side of it, joking aside, is like really good. On the companies from our side, Steve brought up a great point on what he's going through for cybersecurity. I don't even think of cybersecurity as a thing. I think as data as a thing. I just think of the protection of data, the evolution of data, the exploitation of data, the availability of data. AI does not work without accurate data, period. The reason we have to think of beautiful words like hallucinations in OpenAI, which is just such a gorgeous word for lying, is because the data is all broken underneath it. And like case in point, if you're looking to try and get external data sources, so if I wanted to go to Dun& Bradstreet or Moody's or Sayari or ChatGPT, and I wanted to pull the same list from 15 different disparate sources, all would be entirely different and none would be more than 30 or 40% accurate. So it's literally impossible for AI to work on top of inaccurate data. So my thesis, like leaving aside the country by country, what happens within the regions, my thesis is really simple. Data is the only thing that matters over the next 3 to 5 years. Whoever conquers data is going to have huge companies. And so when we were making the decision, like our whole play is come in early, work with them, invest more, invest more, invest more, not in the rounds, but outside the rounds in our own little game until we get to private equity. And once we get to private equity, we make the heavy investments into the companies. And so one of our investments in Matchbook AI, I think it's just such a wonderful investment because they were started out by dealing with matching of data. We know that matching of data is absolutely horrible. They built in really good agentic solutions to be able to accelerate that. They have the best solution for technology in the world. They actually have no marketing division whatsoever, and they have 10% of the Fortune 200 companies which are using them, and their GTM is absolutely awful. So for us, we saw this great gap for a company that's doing $3, $4, $5 million a year in ARR, 10% of the Fortune 200 companies, starting out with the matching of data, which is building the accuracy, which is a huge problem, and building towards a unified, enriched data product, which will be the best in the world. And so that's where I want to go for. We'll do Matchbook. Matchbook will do fantastic. And then we go in and we just go data, 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 data. Everything I want to look at is going to be data.
This is brilliant. Very, very clear. And it's a great message to the market as well. I want to go back to Steve. Steve, as a Corum Group being a very global networking and as well as the entity, like we have literally from mainland China to all the way to Europe, we look at many AI companies daily basis. And in our assessment, only 4% in today's companies are really AI native. More than almost a half, 48% is that we call them AI adaptive. So my question is that, have the latest advances in particularly generative AI technology changed your investment thesis? If yes, how?
Well, I think, Nihat, you've heard from the whole panel that some people are very good at investing in AI wrappers, things that sit on top of general AI, and then over time solve a very specific use case. And others are focused on how do you build proprietary AI. Some are focused on high levels of the stack versus low levels of the stack. A lot of what we're doing with generative AI is actually inside the company rather than our investment thesis. How do you help companies be able to operate more efficiently with fewer headcount increases? And we're using it inside of DN itself in terms of how do we build our investment cases, our market mapping and analysis, at least to augment what our analysts do. I think we have a personal bias slightly against the Gen AI side of things as opposed to proprietary AI, just from our own personal bias. I think Ryan hit it very hard in terms of identifying where do you build competitive moat. One area to build competitive moat is data, and it could be what you start with, but it could also be how you generate data. And I think that if you're going to build something on top of Gen AI, you have to be able to say, how do you build a proprietary data set out of your business model? And that's something that a lot of the startup entrepreneurs that you probably get pitched don't actually think through. They think about, how do I solve a problem today, like maybe better AI for legal or better AI for collections, but they don't think about, well, what does that mean in terms of building a data moat over time? And one of the challenges when you build an AI model on top of generative AI is you have to think about what your gross margin actually looks like. If you're spending your modeling costs on building your model and then you run a proprietary model, then you have 90% gross margins. If you're using someone else's model for your inference, you might have zero gross margins. And I think some of the very high profile companies we read about that are Gen AI based, you actually look at the gross margins, they're very, very low because all their costs get fed back to Anthropic or OpenAI, et cetera. So I think as VCs, it's very important as you think about, should you invest in something that sits on top of Gen AI, think about what are the true unit economics, what are the sustainability of that competitive moat. Are you building a proprietary data set? We found it hard to find that, but we're open to it. It's probably 5-10% of our AI strategy, as opposed to we're trying to find things that are slightly different, just because we're very focused on sustainability of margins and competitive moat.
Sure. Tara, what are your thoughts?
Yeah, so for us, generative AI hasn't really changed our investment thesis or the fundamentals of it, but it has enhanced our operations internally and our portfolio strategy. So, from a firm operations perspective, we're incorporating AI very heavily into our process now. So, um, we've leveraged it into our sourcing processes. We have our team uses tools like ChatGPT Enterprise and other AI co-pilots to help with research and diligence and financial analysis. We also have our own proprietary machine learning program to help identify and score potential investments. And so we're really incorporating AI into all functions of our teams. We also do a lot of internal trainings and demos and brainstorming sessions to make sure that we're making the most use of it as we can. And then from a portfolio strategy perspective, we've layered it in a number of different ways. So one, we've added a dedicated AI section into our investment materials. So every deal team, as we look at opportunities, is evaluating AI-related risks and opportunities during diligence, and that includes a SWOT analysis of how AI is impacting the company and market today, but more importantly, how it could impact the company, the market, the competitive positioning during our hold. We built out our own Mainsail AI Labs Center of Excellence to help our companies optimize for AI. And Mainsail AI Labs is basically a team of senior level and experienced former CTOs, as well as engineers and AI architects who partner with our portfolio companies to help them form and execute on their AI strategies. And they're very deeply involved partnering with our companies on supporting development sprints and building the roadmap to make sure that we're helping with launching these products into the market. And so ultimately, the fundamentals of what we invest in hasn't changed, but it's definitely, generative AI has really expanded the scope and speed of what's possible for our companies.
Sure. Gabriela, what are your thoughts?
Yeah, I'm completely aligned. And to Steve's point, it's very easy to create an app that will default or depend on Gen AI by creating an app that defaults on its own data and trends and all of that. It's harder to find. However, there's still a lot of value in the other ones, I think, at least in some pockets. And for me, or at least for us, I think we're still discovering what this is all doing. There's so many views, but we're still we come across a lot of people that are coming, the number of ideas and things that people are doing because of AI tools that allows them, it enables them to create things that they weren't able to create because of cost or accessibility or whatever reason is immense. We are also heavily connected with the Latin American market with, I heard some comments today, and that's another region that as they pick up and, with the computers, the access to technology, all of that. And so you put Lovable in their hands and you just don't know what they're going to come up with. So I think I think a good strategy for, at least for us, is to be as connected as we can with the pockets of the micro economies that are creating things that maybe the underdog, may not be the kids out of the elite school, maybe people that just have access to a computer and ChatGPT or whatever. And so it is important to be out there more than ever and to have those connections and just have your antennas, watching, who's doing what and where. Somebody also made the point on the fintech, and that's true. I grew up in South America, so that the fintech platforms, and they're going to continue to. The developing world is going to be where I think some of the big bets are going to be. So you have to have your feet in the ground there. You need to be talking to the people. And again, it's not always going to be with the main schools or anything. It's going to be a kid and their laptop and access to the internet and a tool like Lovable. And you might see some surprises of kids just coming out of nowhere with solutions that are going to change the world. So very interesting.
Yeah. Yeah, very. So I'd like to come back to Stockholm and Tanya. What do you think?
Yeah. So, I think we're pretty much in agreement with everybody. I mean, what everybody said. I mean, Gen AI has not really changed our investment thesis all that much. However, we do obviously for operational efficiencies use it. All of our companies are starting to use it, of course. And for the fund, then Butterfly, very similar to Tara, where, we are using it internally. We do scoring as well. It's, investment modeling, comps, presentations for the IC, those types of things. Really kind of, really scrubbing, and it's made our analysts' lives a bit easier, which is great for them. And also mine. So, and then of course, I think this is really interesting too. We are an Article 8 SFDR impact fund in Europe, and so we use a third-party AI analysis company called Upright, and they do an analysis on each one of our companies when we invest in them, but also they do the portfolio analysis for entire Butterfly fund. So. And that has been a super useful tool because they can do comps to other funds, and then of course comps for our companies to other companies, and see where they kind of align. So that's been really great, and that can all be done in the flip of a switch, basically. So that's been really helpful for us, not only for our portfolio companies, but of course also us. So, but that's probably it from me on that subject.
That's key. So I'll come to Brian, and Brian. Please, I'd like to finalize this round with you.
Oh, wow, that's such a mistake. Okay. I will say it would have been fun if somebody had felt the need for an AI girlfriend or boyfriend or husband or wife. But, since that didn't happen, I will just create this underbelly to finish, which is kind of in a place of truth, which is like we are in the most brutal venture capital world in I don't know, 10 years, maybe even more, right? LPs who used to be rich are now poor. Some LPs, only some, are actually wealthier. The US hasn't had any decent IPO activity, and I don't even remember 2001, except for sporadic stuff has happened. Real estate is in a hellhole right now with interest rates at 5+%. So all of the activity that created liquidity in the environment that would have driven lots and lots of money into areas where all startups would have got action is actually screeched to a grinding halt. You now also, to make it even worse, there are thousands and thousands and thousands of VC, who's a VC lab? They spit out 300 to 400 new VCs every 3 to 6 months. Everybody's a VC. Everybody's an angel now. Everybody has the same thesis. Everybody wants to go after AI companies. So you have this crazy, weird, ridiculous, stupid space where everybody's chasing the same thing. Everybody has got less money. Everybody's talking as though we're investing gazillions of dollars, but the market is very, very, very tight. And actually most of the money is going to very, very few companies because they're the safe bets that everybody is chasing. I love these types of markets because what happens is they drive really good activity because you have all of these great founders that literally can't get funding. You have people who traditionally would have raised $2, $3, $4, $5 million in their sleep can now not raise money, and they don't understand why, and nobody can tell them because none of us really want to have this discussion about what's happening in the world today. So it is a lonely, difficult, very awkward, hard, journey that everybody has to go on their own. So I'm thinking of, I can't get any of those AI things that I mentioned because my wife would kill me, but I can't even get and even my dog doesn't care. So I'm going to go for an AI dog. That's how I'm going to finish.
Sure.
I'm going to go for an AI dog who cares.
I'll go with the cat, but okay, considering the time, what we will do is that I will remain with Brian with you, and now we want to go into the exit. We talk about the ideas, the thesis, the market, as well as at your investment. I learned so much. I mean, really, this is like one of the best MBA classes I have ever been. But I'd like to ask you, Brian, when you look at entrepreneurs' perspective, and when you're looking for the investment, what are the advices that you could give it to entrepreneurs, like especially for the exit perspective, and then looking at your role?
Prepare for 27, 28. President Trump, in the same way that he couldn't stop himself from enriching himself in such a wonderful way, he's also not going to be able to stop himself from creating the greatest economy that the world has ever seen before he goes. So he is seen as the greatest president, period, that has ever existed on planet Earth. That means that I'm getting ready for, and that doesn't matter if the market wants it or not. He'll create it because ego dictates. And so I'm getting ready for 27 and 28 for the greatest economy that has ever existed. And I'm telling all my founders, drive growth like crazy today, become a media company, create a movie, be the hero in that movie. Don't beg for money today, beg for customers today, build your stuff, and then get ready towards the end of 26. Then you go hard to try to be able to get the best for your company. Yeah, it's all going to happen then.
Perfect. Steve, are you aligned? You're on mute.
Sorry about that. Generally aligned. I think VC exit markets do go in every 7-year cycles. So we had a big one around 99, 2000, a small one just before GFCs, small one in between. We had a pretty good one in 2021. So probably 2028 does feel about right. I think that first, the important thing to note is be realistic about what your true TAM is. And that sets the expectation both in terms of who you're going to get out, how you're going to get out, and who your right VC is. Frankly, if you have a business where you could get 100, 200 million valuation, you could be a fantastic investment for someone who has a 20, 30 million fund, and you'll be a terrible investment for someone who has a $600, $800 million fund. So make sure that all of your investors along the way are aligned with you, because if they're not aligned, they will be terrible as you seek an exit, because they'll say, wait, you need to push harder. And you say, well, my business can't support going harder. And oh, we need to replace you as CEO because you're not pushing hard enough. So you get all these conflicts. So you want to create alignment all along the journey towards exit. And then in exit, all founders start off saying, oh, I'd love to run a public company. Running a public company is really, really bad. It's really not fun. I mean, you're spending all your time with analysts. You're not actually getting to do the fun start of building a business. You're probably spending a few $1 million a year on protecting yourself from lawsuits. It's not a good experience. So think about your entrepreneurial role as an entrepreneurial journey. Is this your one and done, and then you're going to go to Marbella? Is this the first of 5 companies? Are you going to be a VC afterwards? Are you going to go plural and get involved with lots of companies? Or is this your white whale and you're going to try to really kill this one, Ahab, and really think about what is the role of this company? And therefore that leads to, is this going to be a trade sale? Is this going to be something that you do think you should IPO? Is this something that should go to private equity as part of a roll-up? Should you be the consolidator or the consolidatee? All that fits into who you are as an entrepreneur. And that's what you need to be thinking about from very early on. Where does your exit line into who you are and what type of company you're trying to build?
Brilliant. Brilliant. Tara, what are your thoughts? Aligned?
Yeah, there's a lot in there I would agree with. So, I think if I were to distill it down, I think it really depends on kind of 2 things. One, it's a personal choice, and for the entrepreneur, knowing what they're looking for and thinking through that. And 2, also evaluating where the company is in its journey. So, companies that are growing quickly or have a huge TAM opportunity ahead of them or can benefit from some operational or strategic support, then an investment can be attractive. It allows the entrepreneur to take some liquidity, bring on a partner with resources and experience, and still participate in the next phase of the company's journey. While, a company that's maybe reached maturity, smaller market, or the entrepreneur is just ready for their next chapter and wants to go off and do their own thing, or the market's consolidating, then I think M&A, makes a lot more sense in that case. It also allows the founder to get full or mostly full, liquidity and exit. But ultimately, I think for each entrepreneur, it's a personal choice, and they should, look to find the right partner that aligns with their goals.
Gabriela, what are your thoughts?
Sure. So I'm an attorney by trade, so we do tons of M&A as well. And I think one of the biggest issues that I see is one, everybody thinks they need VC, and some people don't need VC because they have a you have a high margin company that's already selling. Maybe what you need to do is reinvest your money. And I've seen plenty of companies be very successful and then get to private equity that way, never taking a cent from anybody. But if you think that M&A, if investment, if you think VC is your route, you need to really, really learn what the game is like, because these are every investment is a major event in the company, and getting in with the wrong person or the wrong VC or the wrong personalities really will tag along for a long, long time. So really know who really is a match for your company. Not everybody's a match for everybody. And then on the M&A, what I tell people is you need to be ready from day one. Like if you own a company, your M&A journey already started. And it's same if you want an investment, because at some point you're going to get audited and there you go. I mean, your whole history's up in the air, out in the open. So be ready today and act like you're going to be exiting tomorrow, because you also don't know when the buyer or the investor are coming. You just don't know in the business world. You might have to, a good deal may come any time, even when you're not looking for it. They just show up. So it's a job. It's an art. It's a job. It takes a long time. It's emotional. It's a detailed process. So be ready, take it serious, and get educated about what it looks like.
Yeah, perfect. So we started in Europe. Now I'm going to end in Europe. So Tanya, you're going to go ahead and close the deal, but I love to hear your thoughts as well.
Yeah, and given my experience, obviously, again, we invest in very early stage companies. So a lot of times, even at seed, and we're not seeing our companies really exit until anywhere from years 4 to 7, right, of our holdings. So, I mean, it's a long journey, and sometimes we get lucky on the early end, and sometimes we have ones that we're a little bit later than we would like. So that's the art of VC, right? So it is what it is. Right now in Europe, early stage is really hard right now. So there's a lot of money being poured into these kind of like larger growth companies, the ones that are more profitable, obviously the Lovables of the world, for example. So the very early stage technology companies in Europe are hurting. But there's really great funding, public funding, such as the EIC, which I happen to be an advisor for. It's a almost $4 billion fund, which does, help kind of kickstart that ecosystem, if you will. I can tell you that a lot of my companies coming from, this region, they all have the aspiration to go to the US. And to be honest with you, you're going to maximize your value if you end up in the US and get the US as obviously your target market. So if you are an EU founder, for example, and you're listening to this, I would highly suggest trying to figure out how to get over there and maximizing the market there. Also talking about M&A depends. I think, we also invest in deep tech companies. So sometimes the corporate strategics come in at a very early stage, particularly, for example, we have a company I mentioned in semiconductors. They do They do LEDs, nothing to do with AI at all. So micro LEDs, but Google bought a competitor of theirs many years ago for $1 billion, and I think they had 40 employees. So these things can happen, right? At an early stage, but there's also windows of the kind of this M&A market, and we're starting to see the windows opening now a bit, which is really great. Not only from corporate strategics, but also PE is entering in a big way now in tech. So those are also, I think, another area for founders to potentially exit. So I agree also with what everybody else has said here today, and this has just been a wonderful wonderful panel, and really I have learned a lot as well. So thank you so much.
Tanya, this has been really great. And, to your point that many investors looking at as knowing that the investment doesn't have any border to the scale. And to your point of the expanding, if you're in European Union to North America, if you're North America expanding to Europe, if you're a mainland China company coming and looking at the whole thing at the global level, give a comfort to many investors and to prove your value that it's just regardless of your country or the sector, you can expand. So I sincerely want to thank you all. It's been a great day. And to Tanya's point, I learned a lot. And I'm very glad that this is going to be recorded so I can go back and use as a reference. So thank you very much for your time, your brilliant insights and know-how, and really bringing all this together. So thank you.